Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bell on this Friday afternoon, here to help take us beyond the bell. It's our global simulcast partners, Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences. Carol, I'm going to try this again. We can talk about one of three things. We can talk about inflation, we can talk about record highs on the S&P, or we can talk about the pandemonium in Piscataway, New Jersey.
I've been getting some clues from my team about what happened between Rutgers and Purdue. Go Rutgers! I'm just going to put it out there. See, I got up to speed. Hey, it's talking about getting up to speed. Could we see a 67th all-time high in the S&P 500? We're awfully close. Looks like we might be able to do that, Tim.
Yeah, what a day, what a week. Dow finishing the week looking at north of 4%, 3.8% for the S&P 500. It's looking to shape up there. NASDAQ by 3.6%. Even the Russell 2000 looking like it's going to eke out a gain of 2.4% this week.
And eking out a gain despite bond yields falling, right? Bond price higher on a day when it feels like sort of a flight to quality, a flight to safety, or is this pulling forward some of those rate expectations, though still at 66 basis points on the 2-year, and some of the slowing growth and slowing inflation 10 years out?
I mean, that could be it, but at least if you look at the stock market, it seems like everyone agrees that this isn't going to change the needle for the Federal Reserve. It's not going to accelerate their liftoff. If you look at tech today outperforming, that certainly seems to be the story.
Yeah, and you're getting that big lift for tech. You talk about a record high in the S&P 500. What about Apple? I know, Carol, you've been keeping an eye here on that march toward $3 trillion. How close are we?
How close are we? I'm going to pull it up on the Bloomberg. Where are we, guys? We're really, really close to it. We're at 2.946. I know. It's so close.
Well, so close there. All right, look, it seemed like just a couple weeks ago we were talking about this massive drawdown that we were seeing across the equity markets. S&P, I think, was down more than 3% from its all-time high. You're looking right now what's going to be a new record high, waiting for the numbers to settle. But right now, we're sitting at 47.12, up about 1% on the day, or 45 points. The Dow Jones Industrial Average up 0.6% or 217 points. NASDAQ Composite, a pretty respectable day, up here 0.7%, 15,630. All three of those indices higher by about 3% on a weekly basis. The Russell 2000 going to finish the day in the red, but only by about 0.4%. So off the lows of the day. We should point out still, Carol, the Russell 2000 is higher on the week by a little bit more than 2%.
Yeah, no, that's a really good point, because we know we've seen those small caps getting whacked around. Boy, it's Friday. I can just feel it in my brain. But nonetheless, we definitely saw a really bullish tone to today's trade, and really in terms of risks, investors, Taylor, kind of backing off, or Katie, like backing off of that.
Absolutely. I mean, you can see that just if you look at the breadth of this market. If we take a look at some of the industry groups, you have food up at the top. A lot of that is Costco, followed by tech, hardware. A lot of that is just plain old risk appetite. If you look all the way down at the bottom, there's not a lot of losers, but you can see that banks are in the red. A lot of that has to do with what we were just talking about, the fact that yields aren't really that fussed about this inflation print that we got this morning. And it looks like, again, just a risk-on day.
And just real quickly, I see at the bottom screen the retailing. I thought it was interesting you saw some of these retail names kind of weaker on the day. There was no real news out, but it was kind of interesting to see that move.
But on the flip side of that, it's like Walmart, Kroger, that are actually some of the bigger gainers on the day. And that's where maybe some of those staples come back into play.
Go ahead.
No, go ahead, please.
I was going to say in Home Depot, too, which just seems to defy all logic. But.
All right. Well, you talk about the retail names, and I'm going to go to my gainers, because Costco is definitely on that list. It's up about 6.5% here as we settle in. Top of the NASDAQ 100. They've reported first quarter results that beat expectations. What I loved, because we all are obsessed with supply chains, they did say they're weathering shipping snarls, mitigating delays, which is pretty wild, even though 79% of its import containers have been delayed an average of 51 days. That's a long time. But nonetheless, that was one of your outperformers. Old tech, can we call Oracle old tech? We focus so much on the FANG stocks when we're talking
They're trying to become new tech. They're trying to make a transition to the cloud.
Well, they have made that transition. Check out that stock, guys. Up almost 16% here in today's trade. It was unbelievable. Earnings story, sales topping estimates, thanks to cloud performance, top in the S&P 500. Broadcom, Romaine, you were breaking it down yesterday, up about 8.3% at the close. Earnings stories, too. And they're buying back $10 billion worth of stock.
That's a big deal.
It's a huge deal, right? I mean, that definitely gets investors' attention, Tim.
Oracle up 60% year to date. Yeah, 59.
Yeah, that's kind of one of those
yesterday.
stealth gainers, right? You don't really talk about it, and then look at the returns you get on that.
Yeah, just a big year for the company. Hey, let's talk about some of the decliners on the day today. On the flip side, in the S&P 500, Moderna finished the day down by 5.6%. It was down as much as 14% after it said that results from its experimental seasonal flu shot fell short of Wall Street's expectations. Still, though, just up more than 150% so far this year, but about 50% off of those all-time highs of August. AMC, I won't say the original meme stock, but among the early meme stocks, finishing the day down by 6.8%. Shares fell as much as 12%. Adam Aron, the company CEO, sold another $9.65 million worth of stock. It does come after he sold more than $25 million worth of shares. Okay. We talked about Peloton earlier today.
Don't go
no
there,
spoiler alerts
Stenovec.
here. I actually, full disclosure, I don't plan on watching Sex and the City, so I wasn't actually concerned about
really,
this.
Tim? We were going to write
not.
over.
It's not.
Should I watch it?
It's not Sex and the City.
It's Sex and the City
It's
reboot.
called And Just Like That.
Yeah.
Get it
Just
right.
like that.
Sorry.
Thank you, Romaine.
But I'm told not all the women from the original are in there, right? One of
They're
them's
not.
missing.
Samantha's missing.
What happened? They killed her off?
That's she's not the one
have
that
to do with the
Samantha.
Peloton.
That's all I'm going to say.
In all
She's
seriousness,
missing.
without giving away anything, I thought it was funny the amount of attention that was given to this by a lot of research analysts who put out notes. Even Peloton came out with a somewhat cheeky statement saying, don't blame us, and I'll leave it at that.
Look, one analyst essentially said that this is a Peloton actually losing control of its story, and it's a big part of the story. But this is not the whole thing with Peloton today.
Part of a fictional story,
right?
Just to be clear,
I'm just repeating what an analyst said. But it does follow a downgrade from Credit Suisse, an analyst from outperform to neutral. So that happened earlier.
Can I get us back on track? Can we do?
No.
Well, wait, I'm just going to say,
again.
you guys won't remember this, but Murphy Brown, do you remember when, because she was pregnant, she was a single mother, and Dan Quayle, who was vice president at the time, made a comment? So it's like art imitating life, life imitating art. It just kind of melts together.
Let's melt together these bond yields, you guys, as we wrap up
Good job,
CPI this week. And we look forward to a Federal Reserve meeting next week. And it pretty much, Carol, was a week of yield higher across the board. Look, up 7 basis points to 66 on the 2-year. If you're thinking about where the market is pricing in a Federal Reserve, and then you're up 15 and 20 basis points going out on the long end. But you still haven't cracked a 150 or a 2%. And I think that just shows you the low levels that we'd come from the previous week with all of that volatility.
Still below 2%. It does certainly feel like, and guys, let's talk about, what's going on. We did get the CPI print. We are looking at the Fed meeting for next week. But it does feel like, I think it's safe to say, and Taylor, you're the expert on this, but in terms of the Treasury curve and what we're seeing in the Treasury market, seems to be like, okay, we understand that there's inflation. We heard that from the Bank of America CEO this week. We get it. We know the story. And the markets seem to be getting comfortable with the idea that ultimately we're going to see the Fed be a lot more hawkish going forward.
Well, you would think so. I mean, we actually heard from Kamal Kumar. He basically said he actually thinks they could start hiking rates, towards the end of Q1?
March. In March.
Yes.
Yeah. Yeah, that is definitely an aggressive call. I haven't heard that, but you are seeing that.
And he tends to be a bear, though.
Yeah,
safe to say.
Yeah, but he did raise some good issues about kind of like when you look at the economic picture, and we've put up charts all day here on Bloomberg Television showing kind of the erosion in some of the wage gains, the erosion in earnings. You have a negative real earnings yield on the S&P 500. All of those wage gains that we were applauding, you're basically not getting any wage gains when you factor in inflation. So these are real world issues. I don't know if the Fed addresses that or how they address it, but it's something that is having a material impact on the economy.
If you're looking for a silver lining, we did hear from Reed Pickert that if you break it down, it's the lower rungs of the income tier that are seeing bigger bumps, but overall, definitely that wage picture not looking great.
You're paying, if you're a meat eater, you're paying 13% more to buy meat. If you're not a meat eater, you're paying 5-6% to buy your vegetables. I am also told that apparently no cream cheese exists anywhere in the state of New York.
There's a shortage of cream.
There is a shortage. I hope you guys all stocked up. But in all seriousness, I mean, when we do hear from Fed Chair Powell next week, I also wonder if he's going to make a point, as he does in recent months, and he has in recent months, Taylor, about making sure that people don't conflate the idea of tapering and speeding up tapering, perhaps, with raising rates, and making sure that he's making the point that that's not necessarily happening at the same time.
Pulling forward the tapering to maybe ending the tapering by March, but interesting, the market's still looking for 2 to 3 rate hikes next year, which means I guess if it's not March, it's June. You tell me.
And a global issue. You see the week ahead there. Don't forget about the ECB, the BOE, Bank of Japan, Bank of Russia. A lot of big banks are going to have to discuss this issue.
Weighing in, and you do wonder how much of them just say, let's get through the end of the year, and let's wait to see what the new year comes. I'm already starting thinking about earnings. Is it too soon?
I think
We're still doing earnings.
We haven't even got to Christmas yet. You're like one of these people who starts celebrating before like the other holidays already over.
No, I don't go early. But I guess I want some more clarity about companies and how they can manage supply chain disruptions. If they're paying more wages, is it cutting into their margins? I guess I want to know. JP Morgan reports on January 14th.
January 14th.
It's too soon.
Calendar.
All right, let's just focus on the weekend. It's supposed to be nice this weekend, Carol.
Mark your Google Calendar.
Carol's already taken her Christmas tree
I am
out.
so
She's already done
angry about the Sex and the City reboot and the spoiler alert. This is what you get. All right, guys, have a good weekend. Stay safe.
You too.
All right, that's going to do it for our market wrap, our Beyond the Bell coverage, cross-platform on radio, on TV, and YouTube. We'll see you again, same time, same place on Monday.